Hello everyone, this is Ming Jong. Welcome to another episode of the daily market analysis for the S&P 500 E-mini futures for the session of 14th of October. In this video, I'm going to share with you the market recap from yesterday and also a trade review in the 3 minutes time frame, which I will include the entry, the exit, and also the rationale behind. And most importantly, inside the trade review section, I will be explaining in detail on how or what is the best time to exit a trade. And I will just talk about one thing that we must know and different kind of the trade management strategy that we can adopt. And going forward, I will definitely sharing my trading plan and also the levels that I've been watching, and together with some of the market outlook to anticipate what kind of the market will do in the later part of the session. Alright, so let me just get started here. So as we can see here, yesterday another bearish day right after the overbought of this climatic up bar. And we can see that we have an increasing of the supply level, but just look at the results. It's not very threatening despite having this much supply. The results to the downside is not that significant, but we just still need to keep monitoring because the current correction might not completed yet, and it could just continue for this later session as well. So let me just get down to the hourly time frame and let's talk more on the market recap and what's happening for the yesterday market. So you can see that prior to yesterday US session, during the Globex period, we have this kind of the consolidation. So that's right after the climatic up move. So a bit of the climax, buying climax, hitting the channel overbought as well. So it's quite natural to anticipate some kind of the pullback or correction to come. So subsequently, you can see that during the US session, it's kind of in a tight range. So that's the first 2 hours, and that comes with the increasing of the supply if we compare it to the prior session as well. But look at the results of these 2 bars here. Not that bearish. In fact, we have seen these 2 demand tails, and they're actually reacting from this immediate supporting area at around 35.10 to 35.15, as I pointed out in my video yesterday. So definitely these levels provided some support, and eventually we can see that there is no lift. So right after the 2 demand tail, there's no lift in these 2 small candles, and then eventually comes a capitulation bar or this breakdown bar at probably around 1 a.m. at my time zone. But still not much follow through to the downside. We see another demand tail here, but at the closing we have seen this rejection tail. So a bit of the selling at the end of the session, but so far is not very threatening based on the progress to the downside. But definitely we have seen supply increases as shown in this volume as well. Let me just get down to the 3 minutes time frame and let's talk more on how do we decide what's the best time to exit a trade and what do we do about that. So is there a way to determine the best exit for the trade? But before I answer this question, there's one thing that I would like you to ask yourself as well. I think this is very important because before we decide where to exit or when to exit, we just need to know that the objective of this trade. For example, if we day trading, obviously we can't really expect like in this case the S&P 500 to move probably 100 points just within a day, especially, well, probably not in this kind of the environment. It probably during some volatile period, but maybe you can just take a look at the true range or just take a look at the previous support resistance. So if I just zoom out here, let's zoom out a bit more. Like you can see that we have probably, you can see this is a support area, this is another support area. Obviously when something is trading around somewhere around here, 3500, then you probably won't expect it suddenly can go down to test the support or the support at a further down. So just one step at a time. Like for example, somewhere, if we're trading somewhere around 3500, then the upside probably I will be looking at this very obvious swing high at probably 3530, and then followed by 3540, and eventually the all-time high at probably 3580 or 90. So it kind of depends on where you want your objective for the trade. So in short, if we find that the price structure actually violate and no longer favor to your desired direction, then this is where we need to exit our trade. For example, if you betting on the long side, you buy the contract, then you just expect the S&P 500 will just rise. Then we just need to look at the structure, and when the structure indicate that it's no longer in your favor, then you probably should exit the trade. Otherwise, some of the techniques that I would like to use almost every day is pretty much trailing stop based on the commitment bars, like the actual candle itself, and also based on the typical swing high and swing low based on the price structure. So let me take this as an example. So for example, in the last swing up here, so I will probably, if I want to trail it very tightly and I want to probably just reach this target, then I might just use the actual candle itself to trail the stop, and eventually I probably can get it very close to the target that I would like. And in this another case, for example, if I want to use the swing low, swing high, probably let me see, let's say if I short it here after this kind of the double top, break, retest, and reversal, that kind of thing. And if I trail it using this swing high, then I will probably get stop out maybe somewhere around here, and eventually you can see that it actually violate the structure, the swing high. So there are probably, for me, I just use a swing high and low, and also together with the actual candle to trail my stop. So let me just walk you through with this example here. So let me just jump straight in with this trade review. And the context of the trade is actually based on the level that I mentioned yesterday, about 35.10 to 35.15. So you can see that there's one touch, second touch, and the third touch during the US session is still pretty much interacting with the level. So this is definitely a valid level, and I can definitely base on this level. And subsequently, I just trade against this level, and I need to analyze the price structure. And before I do that, I also watch out this previous swing low here, because it's just right at this supporting area. So there's a high chance that it could do force kind of the breakout, as I indicated here. So that's the immediate support, and you can see that this is kind of the forced breakout, and then followed by a reversal. So a lot of the short trader, breakout trader, if they just short it here, then they find that, oh, it doesn't really go to their way, so they just cover their short maybe and do the short covering, and actually just propel this rally as well. But one thing that is important is definitely I see that there is an increasing of the supply here. So there's an increasing of the supply during the leg down. So there's a high chance that we'll be seeing another test for this swing down here. So here is the test, and the test comes with the decreasing of the supply, and also kind of tested the previous low as well. So I think this is perfect, because in terms of the swing, we have seen the supply has been decreasing, and in terms of the individual candles, we have this kind of the spring type of the action, false breakout, attempt to break out from the previous swing low, but just reverse and close near the high, forming a hammer. So this is the first sign that prompt me that there is a up leg coming up. So I just wait for this confirmation bar, and this bullish bar right here act as the confirmation bar, and also my entry right after the close of this bar. So subsequently, I just anticipate that I probably can close my trade at least to ride it to around 35.22 or 35.30 based on the swing high level and the obvious resistance level. But if I just look at how the price moved previously, we have seen this kind of the zigzag type. So in this case, I would like to ride a bit more profit, at least from here probably to something around here, or even a bit more. So I just would like to give a bit of the buffer or leeway to ride the profit. Otherwise, if I trail it using the candle, like for example, if I probably use the candle here, then you can see that I'll get stopped out right at this bearish candle. And if I just use like swing low, but probably this is not a valid swing low, because it didn't really create another higher high here. So in fact, it just have another swing down. So I will definitely also not to place my stop just below this. Looks like a swing low, but it's not confirmed yet. So I just waited, and until I spotted this reaction, the pullback with the increasing of the supply. So this is the first red flag to me, because although that we have seen still a higher low, higher low, in terms of structure still no problem, but in terms of supply, I'm not very comfortable, because there's an increasing of the supply together with the down move. So I will just give it a bit more chance if it can just recover, because you can see there's quite few demand tail. So if you can recover and take out the previous high, then there's still a chance for the S&P to go up. So the next red flag comes somewhere around here. So it didn't really attempt to break out. Instead, there is a local breakdown bar shown up here. So at this point, it kind of creates a high. This is a lower high. So I would just want to exit my trade, because it is no longer favored to my direction. I'm betting on a long trade, so I would like to see a higher high, higher low. Is very simple and straightforward. But obviously now I have seen a high, a lower high, and now it just break down and kind of create a lower low as well. So I just exit my trade right after the close of this bar. So you can see that it's probably a minor loss, maybe minus 0.2 R. So instead of taking the full R at my stop loss, which it will be triggered if I just hold on the trade, and I just able to minimize the loss to around minus 0.2. But obviously, this is not the perfect exits, because if you just wait a few more bars, then you probably can squeeze in a few more points and have a very minor profit as well. But because one thing that you can notice is this few demand tail. So this is something that you can also pay attention to in order to squeeze in a few more points. So this is how I actually manage the trade. So in short, just always pay attention to the market structure, and as long as it doesn't really go to your favor, then I think it's better to exit the trade, because you can always enter the trade when the time is mature and is to your favor. So another thing that is that I think it's always better to consider your trading objective. So in order to judge that whether you want to use the swing low, swing high strategy, or you just want to trail based on the candle. So the objective will help you to decide as well. Alright, so this is the trade review section. You can see that subsequently, right after we just have seen this price action testing the support zone here, and eventually it just give up and have this kind of the capitulation. But we have a very quick recovery, tested this area again as a resistance, and then have another correction down. So, well, it's a bit zigzag type of the price structure. So far I only have this one trade. Alright, so let me just get down to the 1 hour time frame, and let's talk about the current market condition or the market outlook. So based on the price action yesterday, definitely the supply has been increasing. This is one concern, but in terms of the progress to the downside, there isn't much progress to the downside. You can see that is probably just, well, even in this last candle, just tested the previous day low, and then right after the previous day low, currently during this Globex period, the Asian and also the European London session is still slowly recovering, and I think we still can rely on this support zone here, because so far it's still interacting and with this supporting area very well. So that's around 35.10 to 35.15. So it pretty much just recover and try to break out, and then have a pullback, and subsequently have a bit of the test at this area. Seems like it's moving towards higher ground as well. So as long as I think it can just commit above somewhere around 35.20, then we will have a high chance to see a breakout of the previous swing high at 35.40. So that's the previous swing high, and on its way to test the all-time high level at 35.87 if I remember correctly. So my trading plan was actually probably still based on this level alone. This is one level to watch, and the next level will be around 34.90 or 34.80. So depending on whether we'll see another deeper correction, then this is the next level I will be watching, 34.80 to 34.90, and also 34.50 as well if it really just have a deeper correction. So the immediate resistance level will be obviously the swing high, 35.40, and also I think if you can just break above the 35.40, then we'll definitely on its track to see S&P 500 to test the all-time high level. So that's at around 35.87 or 89, 88. So this is what I anticipated. If we can just recover and overcome this, otherwise then this is the first level, 34.50 to 34.80 should provide some kind of the support level. This is the end of the video. If you enjoyed the video, just click like and keep watching the video that shows up on the screen if you'd like to increase your winning rate when you're trading the breakout. So I'll talk to you soon. Thanks for watching. See you.